Hi everybody, this is Lara at pureelliottwave.com. I am going to look at a new cryptocurrency with you today. I've already prepared my technical analysis charts and I'm going to look at Elliott wave as I go through it with you and work out this wave count together. Well, I'm working it out, you're watching me work it out. That's not really together, is it? Oh, look, let's just get into it. Sorry. Okay, the first I notice from Icon is it has this ability to form a huge bubble and then it has a huge crash down to, what was this low here? Just over 1 cent. Wow. And it's come up from there up to this high here, which was $3.26 rounding up. So it looks like it's having a bit of a recovery. It remains below its all-time high, which is up here. And so these are the attributes I'm looking for in a chart for consideration of an investment for myself. So happy to spend some time on this today looking at it with you. The one thing I am concerned about though is this low is below this low, and this downward movement really does look like a 5-wave movement, not a 3. Although it also could be a multiple zigzag. I'm going to start my Elliott wave count here at the low though, and I'm going to assume a bullish bias because I'm just acknowledging that that's an assumption, because otherwise it's going to just disappear and never be heard from again. But currently at just under $1, about 80 cents, I don't think it is ready to disappear yet. I want to know, in Elliott wave terms, 2 things. First of all, does primary wave 1 subdivide as a 5-wave structure? Primary 2 looks like a pretty obvious 3. Is it complete? So those are the 2 questions I want to have answered from this Elliott wave analysis. Let's chuck some labels in here. I don't know that this actually does look like a decent 5-wave impulse. This may not have enough volume to have decent looking Elliott wave structures. I don't know if this 3rd wave is going to subdivide very well as a 5-wave impulse, and I don't want to fudge it by seeing primary 1 over here ending in a truncated 5th wave. I do not like truncations in my wave counts. I think for my purposes, let's just chuck some labels on primary 2. I'm going to take some time to really look at intermediate wave 3 on the daily chart. So I'm going to save this work, create a new chart, call it daily, and hope my work gets copied over. Did it get copied over? Yes, it did. Okay, let's go back at intermediate 3 and see, here it starts from here, ends there. Will it subdivide well as a 5-wave impulse? That's the key to the Elliott wave count. Your 3rd wave may only be an impulse. 1st and 5th waves, they can be diagonals or impulses. You've still got to check these subdivisions, but you know what? This is actually possibly going to work. I think I want to see 3 and 4 here, and so 1 is going to have to be, maybe here's a diagonal. Let's have a look at 1. I don't know if this is going to work. The 3rd wave may be too short or too long. Oh no, that actually works really well. Okay, great. Trend lines, do they work? They have to work. They work. Okay, so now we have a problem of proportion. 4 is much, much longer than 2. Is the middle of 3 going to work? I think it probably will. Let's have a look. Let's get some labels for an impulse in here. Oh, I don't know about that. I think 3 and 4 are in the right place, but I don't know about 1 and 2. I think I want to put 1 and 2 back down here. Oh yeah, that's going to work. Are we going to have an overlap in here though? Nope, that's good. So 1's a nice looking impulse. Is minute 3 a good looking impulse? Maybe not. I wanted to see this here, but is it then going to be the shortest? And are we going to have an... Yeah, we've got an overlap there. That won't work. Oh, hang on. I think maybe this ends here. 0.35232. Oh no, it's still got an overlap. Okay, so that won't work. So if it's here, I don't like the look of this at all. I don't think this is going to work. Well, I mean, you can force it to work. If you see... No, this has to be down here. Oh, I do not like the proportions at all. I think that this may not have enough volume for decent looking Elliott wave structures actually. This wave count's too forced. The problems in proportion are just too great. I'm a little hesitant about this one actually now. This looks like a beautiful piece of exponential growth. A really good crash that really does look like a counter trend Elliott wave structure. But minor 2 is only 15 days, minor 4 is 74 days. Oh, I don't like the look of this at all. Is there another way to count this? No, because the duration of this at 47 weeks compared to 65 weeks here, this looks like it should be labelled the same degree. Well, I think this primary 1 would work if this upward movement was not a primary degree first wave but was another counter trend movement as a multiple zigzag. I think that might be a better Elliott wave count. I'm going to do an alternate and consider that. And then we've got, that doesn't make any sense. Okay, well let me show you what I mean. Yeah, no, let's just get rid of all this. I would have this at intermediate degree, and I think I can see this as a zigzag and this as a zigzag. A and C not too far off equality there, but here we're going to have one of them extended. And I think I'd rather have this like this and C extended, and I think I can see this. So C is, wow, so much longer than A. That's okay, sometimes waves are extended. And I want to see, okay, so far I'm not putting this in context. I'm just labelling the subdivisions as I see them. Degree, let's make this intermediate. I think this looks like an impulse down here. I want to label this like this. That's how I want to label that big bear market. And then I want to label this as a double zigzag, and then I want to label this as a single zigzag, and maybe also intermediate degree. Okay, so if that's how the subdivisions fit, what is the bigger picture? How can you have... You can't, actually, that doesn't fit into any Elliott wave structure. So, okay, this is what I mean. This is actually pretty confusing. I don't think this has got enough volume. So you could have this as an impulse down, correction up, fine until we get to here. So this doesn't fit. So then what you're seeing here, the only way all those subdivisions are going to work is if you've got this and it's still in a bear market and it's going to have a third wave below 10 cents. So that conclusion from an Elliott wave perspective is really bearish for Icon, but I don't think the classic analysis supports this view, and I don't think Elliott wave, if I do buy some of this, and I probably will anyway, I don't think Elliott wave is going to be part of my investment strategy. I'm going to rely solely on classic analysis tools. Let's have a look at that now. I've already prepared these charts, so I'll just go through with this with you real quick. On the weekly chart, at this important high, let's just go back to, we're looking at this high up here, my weekly chart. I'm not looking all the way back to here, I'm just looking at this. So this high at the weekly chart level, there's a huge bearish shooting star candlestick pattern. So it's unsurprising we're getting downward movement. Now there's a hammer candlestick here, and this bullish engulfing pattern here, which has really strong support from volume. For the short term, for the last several weeks, it's upward volume, which is stronger for upward weeks than downward volume on downward weeks. As price rises, volume rises, and is stronger than downward weeks where price is falling. So the short-term volume profile for this movement is now bullish, which leads me to suspect that these lows, about 60 cents, may be sustainable, but there's pretty strong resistance above about $2.75. On balance, volume is in a range, no signal here. RSI is neutral. There was double bearish divergence at this important high. I'm not going to count bearish divergence between here and here, because when you look at the close of this candlestick, it's below here, so we're would be looking at that very strong upper wick. And I'm taking both into account, to be honest, the highs and lows when I look at divergence, but I'm also considering where price is closed. So at that important high, there was some pretty strong double bearish divergence. This could also be considered a failure swing. And so it's unsurprising that we got downward movement, and even unsurprising we're getting downward movement here. RSI is now neutral. The upward ADX hasn't caught up with the potential trend change. It tells us for that prior upward trend, it reached very extreme. It's now flat, indicating no clear trend, so this market is ripe for a trend change from up to down. That's actually kind of bearish. Stochastics neutral, ATR declining as price falls. There's weakness in downward movement, but that doesn't mean it can't keep continuing going lower. I'd look out for strong support about 60 cents. If I do put any money into this, it's not going to be much at all. At the daily chart level, now we're looking at these lows here. We're looking at most recent movement. There's some pretty good candlestick reversal patterns here. Little upward bounce here. These three candlesticks here, a bearish evening star. At this candlestick here, a really strong dragonfly doji. And between these two candlesticks, between price and RSI in terms of the close of those sessions, there is bullish divergence, and then in terms of lows, there is bullish divergence here. So I wouldn't consider this if there wasn't bullish divergence here. There is bullish divergence here, and then we get some upward movement. So that's probably the bullishness here is now resolved. Here we get a bearish engulfing candlestick pattern. It too has support from volume. Morning star here, a little bounce, a huge bearish candlestick pattern here, does not have push from volume. Down here we get a piercing pattern, didn't lead to much. A hammer candlestick pattern is very bullish. It has push from volume though, so that's bearish from volume, but the pattern is bullish. A shooting star here, not much reaction. A bullish engulfing pattern here with a little support from volume, and then followed by a huge blow off top and a huge shooting star. No bearish candlestick pattern here, a bullish candlestick pattern here. Volume for the very short term is pushing price lower, so at the weekly chart level I would expect support about 60 cents to hold. At the daily chart level I'd be looking for that to be tested. There's no clear trend. Stochastics is swinging from oversold, it's reached neutral, price is in the middle. We could be looking at a continuation of an upward swing, But because volume is a bit bearish, I'd be suspecting another test of support actually. The bottom line is we need to see a breakout above $1.10 or below 60 cents before we can have any confidence in the direction of the next trend for this one. I don't think this is as good an investment opportunity as I first thought when I first looked at the chart, but I think I will put just a little bit into it. Not much more than I'd spend on a good lunch out, I think, and just let it sit for a few years and see what happens. I'm only going to invest money that I'm totally prepared to lose in its entirety without a second thought. So that's going to be my approach to this one. Just buy it and hold on to it for a few years and see what happens. The most I can lose is what I put in, and I'm okay with that. So thank you very much for watching. Thank you for your support as always, and I really do appreciate all of your engagement and everyone who subscribes to the channel. Thank you so much. And I have a list I'm going to be working through, and I have a new routine. I am aiming to get through 3 markets on my list every week, so let's see how that goes. That's all from me. Thank you very much.